Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
On Wednesday, September 28th, the pound fell more than 1% against the dollar and the euro after the Bank of England announced it would intervene to calm the irrational bond markets in the UK. The pound was expected to experience its greatest monthly decline since October 2008, shortly after Lehman Brothers' downfall. And the bank announced that it would delay the anticipated commencement of its gilt selling program and make the ad hoc Lehman Brothers downfall. The bank announced that it would delay the anticipated commencement of its gilt selling program and make ad hoc bond purchases. According to the Bank of England statement, it will start purchasing long-dated UK government bonds on Wednesday, September 28th, and continue to do so until the market is calm. On Monday, September 26th, the pound fell to a historic low of $1.03. The most pressure has been placed on the UK government bonds, with prices falling and yields rising. However, the bank's action on Wednesday seemed to calm the market, if only momentarily. At one point, the yield on the benchmark 30-year gilt decreased by more than 50 basis points. On the contrary, US dollar has been on the rise compared to the sterling pound. And the US dollar reached a new two-decade high last week after the US Federal Reserve increased interest rates by 75 basis points and hinted at significant increases at upcoming meetings. Gains in dollars were minimal because everyone anticipated the US Fed's conclusion. However, analysts said the trend would continue to support the dollar for a while because US rates will be higher for a longer period, as reported by Reuters. And according to the Fed's most recent forecasts, its policy rate will increase to 4.4% by year's end before reaching a maximum of 4.6% in 2023 to combat uncomfortably high inflation. Rate reductions are not predicted until 2024. Following the Fed rate hike, the dollar index climbed to a 20-year high of 111.63 and was last up 0.7% at 110.97. Now, coming to the Australian currency and its performance on Wednesday, 28th September, as fearful traders continued to support the safe haven dollar amid ongoing selling of equities and bonds, the Australian dollar continued to fall to new two-year lows, as reported by Reuters. The Australian dollar dropped 0.6% to reach 64 cents and last traded at 63 cents, its lowest price since May 2020. After a brief uptick overnight, it could not maintain it and ended the session 0.4% lower. There doesn't seem to be any significant support in the offing. The Reserve Bank of Australia is anticipated to raise interest rates by 50 basis points next week due to Australia's strong retail sales numbers. And the markets anticipate a 0.5 percentage point increase to 2.85% on Tuesday and expect rates to reach 4.45% by the middle of next year. If you like this information, please give it a like, share it and comment on the video below. Subscribe to the channel and press the bell icon. You'll be notified of the most recent videos from Kalkine. But for more articles, head to the website kalkinemedia.com. My name's Sage for Kalkine Media.